Currency volatility is one of the top agenda items for discussion here in Davos, especially given what the Swiss National Bank did last week and the falling value of the euro. Well, I have with me an expert to talk about that, Lutfey Siddiqi, Global Head of Emerging Markets, Forex, Rates and Credit at UBS. Lutfey, thank you very much for speaking with us on CNBC TV 18.
Thank you, Menaka.
What is 2015 going to bring us in terms of this big issue of currency volatility?
Well, currencies are a derivative of other things.
Of course.
And what's going on in the real world, in the real economy, is divergence. Divergence in, for example, the monetary policies of the US on the one hand, where they're likely to hike rates later this year, and virtually every other central bank in the world at the other side of the cycle. You also have divergent performance in structural reforms, which ultimately drives growth potential and actual growth. So that means that the currency markets will follow that. Official action in the market, central bank action, whether it's through actual intervention or through macroprudential policies, also introduce a factor which is very hard to predict in a traditional economic sense. You can't just extrapolate through economic models. Another factor is geopolitics. These are also subject to event risk, which is, again, harder to predict. So almost by definition, we should be expecting volatility in some of these real variables, and so the currency world would follow suit.
But more so than we've seen in the last couple of years, at least.
Yes, certainly, because what we've seen in the last few years is more convergent monetary policy. Right. You had central bank action that arguably dampened volatility from both sides, but that is no longer the case.
Okay, one of the big moves we're expecting this week is the ECB will announce a bond buying program, and it could be to the size of the estimates range between 400 to 500 billion euros, which most market men say is already priced into the value of the euro at this point in time. What is your take on what you expect the ECB to do, whether it's going to be enough to fight deflation here in the eurozone, and what that will mean for the euro in the months to come?
Right. Well, the first answer is we don't know, so we'll find out tomorrow. But we take the view that it's likely to be more than the 500 euro, million euro that people are talking about. We think it's probably closer to €1 trillion.
Okay.
If the ECB can, they wouldn't want to disappoint the markets. Quantitative easing really only works if there is a shock and awe effect to it.
That, yes.
You can't do it in half measures. In the near term, that is what is required. In the medium term, you of course need a transmission mechanism from what the central bank is doing through to the credit channels in the real economy. And then in the slightly longer than medium term, I guess, you need to see real structural reform, because that's where growth comes from. Monetary policy essentially provides you with air cover, gives you breathing room, under which you need to engage in structural reforms.
Is the 1 trillion that you expect could come through, and which is, I must say, not the general expectation, at least, based on the conversations I've had here in Davos, how much of it is already priced into the euro, if I may ask you that?
I think the market is expecting, as you said, less than that.
Yeah.
There is skepticism about the form of quantitative easing. So this question being raised about how much risk sharing will there be amongst the various central banks. Is it a case of each central bank buys the sovereign bond of their respective governments and they bear the credit risk? Or is there some mutualization amongst them? I think the form will matter almost as much as the quantity.
Okay. Because
what you're looking for ultimately is what's the state of the union? The European Union it's not a political union, it's not a fiscal union, it's only starting to become a banking union. They'd like it to be a capital markets union. For the moment, it's really just a currency union, and a central bank that is able to act, but not a lot of firepower essentially necessarily just from that one barrel.
You expect the euro, and I'm not asking you for targets or values or prices, but just a more broader trend to continue to decline through the course of the year, irrespective of whether the ECB does 500 billion now and holds on to another 500 billion maybe for later on, or does a shock in our 1 trillion?
Yes, so the base case has to be that the euro goes down further. On the flip side, we're bullish on the dollar,
Yeah.
so the dollar should strengthen.
Who isn't? Yes.
The euro should weaken purely from quantity point of view, supply and demand, and the quantum of euros in circulation after QE, if that were to happen tomorrow. But I think we should also be prepared for some portfolio inflows into European equities,
Okay.
if that were to happen. Through the currency channel, you could actually see stronger earnings in European equities, and if that's the case, then portfolio inflows might, if not stop a euro decline, but might make it more staggered.
Okay. How much stronger can the dollar get from here?
It's the consensus view that the dollar gets strong from here. It's a function of what the Fed does. The expectation is that the Fed will hike rates. That's right, the middle of the year. It's still a question as to by how much over the period of the year, and what's the terminal rate. So it's not so much a question of will they hike rates, it's how quickly will it be followed by subsequent hikes, and where will they stop, what's the natural rate.
What's your expectation?
And that is a function of data in the real economy.
Okay.
I would think that they would stop lower than what has been normal in the past. But it might even be significantly lower than what it has been in the past. So that is the core of global macro right now. What is the what is it that the US Fed will do?
And that will determine how much stronger the dollar gets from here on.
And that will determine how much stronger the dollar
What does
gets.
this mean for emerging market currencies? And I think the rupee has done rather well compared to many other emerging market currencies. When I say done rather well, I mean strengthening, and I'm not really sure we want that as a country, but nonetheless, what's your take on EM currencies and on the Indian rupee, if you have one?
Well, India is a positive case, and probably a special case in the emerging markets complex right now. When I think of the rupee, I think of it having been relatively stable, and there's good reasons for that. If you just extrapolate from the discussion we just had about Europe, in the case of India, two things seem to be very clear. One is mandate. The political mandate is very strong. Leadership in the personality of the Prime Minister or even the central bank governor, that's important. Clarity and visible leadership is important. And the other is structural reforms, which in the case of India is infrastructure, whether it's hard infrastructure or soft infrastructure. And there's a lot of potential for India to unlock a few percentage points of growth through that. And that's why I think it's right that people should be bullish on India.
So you think the rupee is fairly valued at 62 right now?
It's
thereabouts.
Thereabouts, yes. So again, if you just look at rupee factors, there's probably room for it to strengthen a little bit more, but we just discussed that the dollar is expected to strengthen. So the net move can be in either direction.
How do you gauge then the impact all of this will have on fund flows into emerging markets? For instance, the equity markets in India are primarily driven by foreign institutional investment.
Yes.
And I think everybody's trying to figure out whether all this currency volatility will mean more money will come into Indian equities or not. I'm sure there are other functions that determine this, underlying growth, all the things that you spoke about. But broadly speaking, what's your expectation?
Well, without commenting on whether current valuation has overshot or undershot.
Well, you just commented on that. If you said that
that changes day to day almost,
Sure.
based on how it overshoots or undershoots. But the trend has to be towards a re-rating of valuation in India if the structural reforms are to materialize. It's just basic arithmetic. For the rest of emerging markets, it is less clear-cut. What's happening is with the likely increase in rates in the US, cost of capital for emerging markets is going to go up, but the exports of many of the emerging markets are more dependent on Europe and China, and those are looking slightly softer. So that's where I think it gets tougher for emerging markets equities. Having said that, I'm not expecting any major drama one way or the other. It's almost as if emerging markets is being sidelined from having been the central focus of global investors.
And the US is playing the starring role right now in many ways than one.
Yes.
Yes. Is debt a better investment in emerging markets like India than equity right now?
In India, I wouldn't comment. In general, we are more inclined towards equity than debt.
You are?
Simply because with yields being, in absolute terms, quite low all over the world, and if you have a lower bound on yields at zero, there's just not a lot of room for it to go.
Okay.
So in terms of symmetry, there's probably more downside on the fixed income side. But corporate bonds in general, we favor.
Okay, final question then has to do with the interest rate cycle in India. We saw what many called a surprise cut by the Reserve Bank of India, which is the central bank in the country. What was your take on what came through, the magnitude or rather the size of it, which was just 25 pips, and whether you think we're going to see much more through the course of the year?
I think with the CPI print, I think was it 5% or thereabouts.
Yeah,
it's,
5.
It makes sense. It makes sense to India benefits from lower oil prices.
Yes.
And so I would think that this is the start of an easing cycle. It's still going to be data driven. But what I like about the way it seems to be happening in India is the sequencing. In the rest of the world, we talk about the monetary policy impulse first. Say in the case of Japan, it's the first arrow. And then the third arrow is what everyone else is waiting for. Whereas in India, there's a lot of talk about the third arrow, so fiscal consolidation and reforms first, and then monetary policy should accommodate that. So the sequencing is very important, and I think it's going in the right direction for India.
I'm glad you brought up Japan. I missed asking you about the yen. Will it get weaker from here on?
Yes, we're calling
hope for it.
We're calling from 125 in dollar yen from here. It's a similar story to Europe in many ways, in that they're also trying to engineer structural reforms under the air cover of monetary policy. But there you don't have the question of the State of the Union. Japan, the political side, has a strong mandate now, particularly after the recent elections. But we're waiting. We need to see more movement under the third arrow.
Okay. Lutfey, thank you so much for your time. Thank you very much for speaking with us here in Davos.
You.
Thank you.
Cheers.